What's up, everyone? Excited to give this video today about Apple, which just reported better than expected earnings. So they're up actually almost 7% post-market right now. Earnings call is taking place as we speak, but I wanted to go over these numbers very quickly just so you know where things are at. So for Alphabet here, their EPS, they reported a beat of 100, or excuse me, they reported $1.44 in EPS, which is a beat by 10 cents, and they reported revenue of $74 billion, which is a beat by $1.8 billion. So on the face of this, we can definitely see that the company has beat expectations, which is obviously a good thing to see for shares. And I'll read out a quick note from their CFO. Our financial results reflect continued resilience in search, which with an acceleration of revenue growth in both search and YouTube, as well as momentum in cloud. We continue investing for growth while prioritizing our efforts to durably re-engineer our cost basis company-wide and create capacity to deliver sustainable value for the long term. So, obviously, this is really a beat across the major revenue streams from the company. So let's take a look a little more granularly into Google and see if we can't take away some things from this article here. So Google and other revenue, Google other revenue though jumped 24% to $8.1 billion, and the trajectory for Google Cloud remains strong, with revenues rising 28% to $8 billion. Operating income rose more than 12% to $21 billion, chiefly in Google services, but notably, Google Cloud operating income turned positive, and operating losses at the company's sunk works, other bets segment were slashed to $813 million. And then the company took severance and related charges of $2 billion for the 6 months ended June 30th, tied to workforce reduction. So obviously they fired a ton of people over the past couple months, and we're seeing that cost kind of be, brought into the balance sheet. And then, and given actions to optimize office space, total charges recorded were at $633 million. So yes, they're spending on severance, but they're also reducing their office space, which is obviously a good thing for the company. And then, with that being said, I'm going to take a look at the chart and see if I can't give a prediction on shares for the short term. With that being said, this is not financial advice, so please do your own research. But we can see that shares are coming up to test resistance at about 130 bucks, which is where the stock had topped out on June 7th. So we're breaking to new 52-week highs, which is obviously a good sign for the stock post market. And now that we're about to break this resistance level at 130 bucks, well, I do think that we could likely move higher off of that break of resistance. How much higher? Well, obviously, it's tough to say, especially with a major event in the market, taking place tomorrow with the Fed. But the next major level of resistance is at about $144. So if we get a move above this resistance level and we're able to sustain it, we're able to close one daily candle above that resistance level, well, then I think we could see a larger move higher over the coming weeks to about $140, which, like I said, is just the next major level of resistance I can see for shares. So be on the lookout for that move tomorrow. If the stock opens up above 130 bucks, I think we could likely get a continuation of that move higher, and that move higher would also come on the backs of bullish momentum. So we're trading above all daily moving averages, and the 50-day moving average crossed up with the 200-day moving average on May 3rd of this year, which for those who don't know is called a golden cross and implies bullish momentum. So this bullish momentum is kind of coinciding with this break of resistance, which is obviously a good sign and could help push shares higher. And then when we take a look at the company's history and we see which months the stock typically does well, which month the stock typically does poorly in, Well, we can see here in July, shares typically rise 4.4%. So on average, July is actually the second best month for the stock. And we can see May as the number one month. Obviously, that's, this this isn't the end all be all, obviously. And then December and September are the worst months for the stock. So good to see kind of the fundamentals. Kind of the seasonality trends being on the side of the bulls, and they're kind of lining up with bullish technicals. So good sign to see there. And then let's take a look at this article written by Stone Fox Capital. So the interesting revelation about the Apple AI plans was the use of both Google JAX and Google Cloud. The long battle between Apple and Microsoft might naturally preclude Apple from working with Microsoft, leaving Google as the best choice to use their AI tools incorporated with cloud services. So it seems like, we haven't gotten that news yet, but it seems like we're in a waiting period for Apple to announce Google as their AI partner. Obviously, we'll see how that plays out, but some analysts forecast an AI tidal wave, leading to about $20 billion in additional revenue for Microsoft in 2024 alone. The company is a $200 billion sales machine, so an amount as big as $20 billion moves the needle 10% immediately. So that kind of shows you how big this market is, and that large effect that investors are expecting to see in Microsoft. Hopefully that kind of translates into Google. So Google would very much benefit from Apple spending aggressively on generative AI by utilizing Google Cloud and other services. The company is currently the third global cloud provider with 10% market share. Google is a leader in AI tools, and Apple, as a customer could provide a major boost to the business. So we can see kind of that cloud breakdown here. So AWS, Amazon Web Services, obviously dominates the space, and then Azure, which is Microsoft's cloud system, they're second here with 23% of the share, and then Google Cloud at 10%. Alibaba Cloud, which is a Chinese company, at 4%, IBM at 3%, Salesforce at 3%, Oracle at 2%, and Tencent at 2%. So, it's good to see Google having at least a large chunk in that. And then, if we get Apple coming on to the AI system and using cloud for that, that would obviously be a big boost. The big AI boost and the addition of Apple as an AI customer should provide some indication of future gains. Not to mention, the search business doesn't appear to be one bit impacted by ChatGPT or Bing AI, with Google still maintaining a large market share of that search trend, right? So right now, 92% of searches are still happening on Google. So definitely, they're still the market leader by far. That being said, though, let's take a look at the valuation for the company and see if we can, kind of tell if the company is trading at a more expensive than it is in its history. So PE right now for the past 12 months is at 27 times, which is basically right in line with the 5-year average of Google, trading at about 26 times PE. But we are still below that sector median. We're still above that sector median of 15 times PE. So we're trading at a premium relative to the market, but basically in line where Google typically trades. And then when we take a look at price to book, we can see a price to book of 5.9 times, which is above the sector median of 1.6 and basically right in line with that 5-year average of 5.6. So this tells me that the price to book ratio is above the sector, but right in line with that 5-year average. So overall, the company trades above its peers, but it's when you take a look at that 5-year average, the company is basically in line with where it historically trades, in terms of a PE basis. And then when we take a look at revenue growth, so we can see here that the company is basically growing in line with the sector. So they grew revenue at 5.2% over the past 12 months, and that is basically in line with the sector, but it's way below the 5-year average for Google's growth. So Google typically grows at 21% a year, and they're actually growing at 5% a year. So definitely a pretty stark contrast from where they have been over the past 5 years to where they are right now in terms of growth. But one thing I do like to see is that growth is projected to improve. So we have a 5.3 times growth rate for the past 12 months. Over the next 12 months, we see a 9% growth rate for the company. So, decent to see that those numbers are improving. And then we can take a look at free cash flow. So leverage free cash flow is at 5.6% growth, which is above the sector median, which actually dropped 5% and is below that 5-year average of 22% for leverage free cash flow growth. So overall, these growth numbers look solid when you compare them to the sector, but they are definitely below, the 5-year average for Google. And then we can see gross profit margin is at 55%, which is right in line with the company's 5-year average and is above the sector median. So this gross profit margin, for those that don't know, is basically just revenue minus cost of goods sold. It tells you what a company makes once it sells its goods or services. So we can see here that this 55% number is pretty good. And then the net income margin is at 20%, which is well above the sector median at 3% and is basically in line with Google's 5-year average. And then we can see the company has $2 in cash per share, which obviously isn't much, right? But it's about 1% of the market cap. But that's a lot of money when you consider that Google has a $1.5 trillion market cap. So overall, these profitability numbers look very good. And then with that being said, let's take a look at how Google stacks up relative to some of its competitors. So compared to Meta, Tencent, Baidu, and some others here. So with that being said, we can see that Google has been basically middle of the pack in terms of stock price performance, with Meta outperforming the general market. And then when we take a look at valuation, we can see that the PE for Google is at 22 times compared to Meta at 25, Tencent at 17, Baidu at 15, and then Snap obviously is very, very overvalued. And then so when I look at these numbers, I can kind of tell that the company is basically in line with the peers. If we were to look at PE in 3 years down the line, we're right in line with peers. So these numbers definitely look solid. And are basically, as I said, in line with peers. Nothing super special there. And then when we take a look at revenue growth, so obviously 5% for the year is outperforming most peers. But I want to take a larger look and see what the 5-year compounded annual growth rate is. So the 5-year compounded annual growth rate for the company is 19%, which is in line with Meta. It beats Tencent, beats Baidu, and then these last two companies are obviously above that growth rate. So overall, growth looks pretty good for the company, and I do like to see some outperformance over the past 12 months in terms of growth. So overall, growth numbers look very solid when you compare them to the peers. And then gross profit margin is at 55%, which is basically in line with most of the peers, with the exception of Meta, who has a better gross profit margin. But when we take a look at net income margin, Google is beating Meta, beating Baidu, and beating a couple others. Only Tencent beats Google in terms of net income margin. So once again, profitability numbers look very good. And then with that being said, let's take a peek at the balance sheet for Google. So the company has $115 billion in cash, and they have $29 billion in debt, which means that they have $85 billion more cash than they do debt, which is very interesting to me because it tells me that the company is in a very healthy spot when it comes to its balance sheet, which is similar to Meta, similar to Baidu as well. So overall, the company does have a pretty solid balance sheet. The company has really good profitability numbers, really good growth numbers, and its valuation looks a little expensive when you look at the entire sector. But when you compare, the PE 3 years out, it's basically in line with the peers. So Overall, I think Google is a really safe and good company to own for the long term. Um, so if you're looking to kind of mirror the S&P, if you're looking to, maybe even try to outperform the S&P, Google can be a very safe in long-term investment to make. And I do think this Apple story, the possibility of Apple, coming on to use Google's AI system, that would be, a huge tailwind for the company. So I think we do kind of have that on the horizon. And then, as I said, the company is breaking resistance at about $130, which I do believe will lead to a larger move over the coming weeks. So that is my opinion on Google. I hope you enjoyed the video. I'll end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.